Welcome everybody and thanks for joining us. I'm Pete Sanders, I'm the co-founder and managing director of Identifi Global, and as my partner in crime is Paul Lloyd, who's the sales director and IR35 expert from Brookson Group. For those of you who have not joined us before, you'll be forgiven to think that you've tuned into Love Island, the clothed edition, but no, we're just two ordinary blokes trying to help our clients get to grips with the IR35 changes. This is the third in our series of webinars, and if you've missed the first two, please check out our website or YouTube channel for the recordings. We will share those with this recording as well. So for everyone that's attending, you'll get a copy of the recording to share with you in the slides as well. In the previous webinars, we've covered what the changes are and getting ready for that, ensuring your supply chain is compliant and what reasonable care is and the challenges you'll face. And today we're going to be covering transitioning your contractors or off-payroll workers to IR35 compliant contracts, whether that's inside or outside. So as I mentioned, we are 7 weeks away from this going live. So there's still time to get ready, but we're getting ever and ever closer. And it's important that you've got yourselves organized. As the hiring company, it's you that's responsible for determining whether the contractor falls inside IR35, not the contractor as it was before. So unless you're classed as an SME, which is by the HMRC IR35 rules, what that means, we'll cover off that briefly. But we wanted to help you guys get ready. So because not only do you need to prepare from a tax and penalty perspective, but you could also be losing vital talent in your business. So as we're getting closer, at the end of this, as a prize to sticking out an IR35 webinar, we've got some free takeaways for you and some exclusive offers, which we'll share at the end. And as an identified customer, you can be assured that you're getting the best and most current advice available as we help you attract and retain top talent with peace of mind in your supply chain. So with that in mind, I will just share my screen and get these slides up. Okay, you see that, Paul? Is that?
Yep, see that. Okay.
Okay. Okay, so what we're going to cover today, a brief recap of IR35 and what you should be doing, statement of work and outsourced services, so moving risk in your supply chain, fee payer service and outsourced administration, contractor migration to inside IR35, how you can prepare and how we can help. About Identifi Group, so we're market leaders in personalised career management and talent acquisition. We're experts in permanent contract and interim resource management recruitment solutions. We're fully IR35 compliant, and these are our 5 core markets. We do work in other markets, often through recommendation, but we specialise in our 3 businesses specialize in distinct areas. So Identifi Global is our technology and cybersecurity recruitment company. Identifi Office Professionals is your core business functions, HR, sales, finance, marketing, etc. And Identifi Body Repair, which is the automotive body repair recruitment specialists. Over to you, Paul. And
thanks so much, Pete.
Here we go.
Well, thank you very much, and afternoon, everyone. I think there was a question come through already, which is around statement of work, so we'll cover that as we get to it as well. So there's already a couple of questions coming through, so pop them in the Q&A or chat function if you get a chance.
Yeah, we'll do them at the end.
Yep. So my name is Paul Lloyd. Obviously, I'm the Group Sales Director for Brookson. And the main 2 areas of the Brookson Group that I was going to talk to you and cover today are effectively around the IR35 rules and legislation. So Brookson One have been providing payroll and accountancy solutions to flexible workers now for about 25 years. A range of solutions from PAYE, umbrella solutions, accountancy and sole trader, making sure that there are compliant payroll solutions enabling the removal of the risk from that supply chain. Brookson Legal, we're very fortunate to have as part of the group, and where I'll talk mainly about today is that it's an SRA regulated law firm that specialised in IR35 since IR35's inception, which was actually back in 2000. So for those of you that thought this was something new, it's been around for nearly 21 years now, but it's always been the contractor's responsibility and liability. So hence the reason why a lot of people either haven't heard of it or only have heard of it in the last couple of years. So we've been advising on this mainly from a contractor point of view for the past 21 years. The public sector changes were made back in 2017, which means that any end hire that's classified as a public sector organisation has had to deal with these new regulations and rules for the last nearly 4 years now, and can share some kind of experience from that over that period of time as well. If you move on, please, Pete. Okay, so what I wanted to do first, obviously we've covered IR35 in quite a lot of detail previously. So quick recap for any of you that have forgotten around what we've spoken about previously, or anyone that's new to the series. So you can always go back and listen to the ones which cover IR35 in a lot more detail. So like I mentioned, IR35 has been around now for 21 years, and there really isn't any change to the actual legislation or the assessment to be made. So the way that you assess it is built up on case law and the key tests around IR35. What is changing is the entity or the person that's responsible in the supply chain. So currently, the rules are Chapter 8 of ITEPA, which means it's the contractor's responsibility and liability to make the assessment. And if they get that wrong, then they're the person that's responsible for repaying that unpaid tax and national insurance. From April 6th, any work that's carried out after that date will be under new rules, which is Chapter 10 of ITEPA. The kind of key differences between Chapter 8 and Chapter 10 is that the person that's responsible for making the assessment has changed. So it is now the client or the entity or intermediary that is receiving the services of that personal service company. And the fee payer is also the person that's responsible for deducting tax and national insurance in the supply chain. And that's the intermediary that's closest to the limited company contractor or making payment to them. Those statuses around client and fee payer can move in the supply chain, and we'll talk about that a little bit later, which is similar to the question that's been asked around statement of works or outsourced services and how that changes the definition of who's the client. So we'll cover that a little bit later on. But effectively, if you're the client, then you need to be creating a status determination statement, or SDS for short. And those SDS should include the decision on whether the role is inside or outside of IR35, advise on the reasons why it came to that decision. It needs to be communicated to the whole supply chain, so to the agency and worker. And the SDS, most importantly, must be prepared with reasonable care. And I'll cover that on a separate slide. That's quite an important point from a client point of view, is that you need to take reasonable care in your assessment. There's a liability flow built into the legislation, which means that each entity in the supply chain, so client and recruitment agency, fee payer, depends on how long that supply chain is, has a responsibility and liability to pass the SDS on and make the correct deductions, or HMRC have the ability to come after different entities within that supply chain. And again, there's a diagram to explain that a little bit better. Within the new legislation, there's a hire-led challenge process, which means that contractors that have received a determination are able to challenge that process. They might come back to you if you've already made your determinations and if you've sent out the roles that are inside and outside. I imagine you're not going to get a challenge from an outside decision, but if you do, then whether it's inside or outside, you need to be able to explain how you come to that determination, the reasons why you feel the role is inside or outside, and how you made that, what your process was that you were getting to. So you need to manage that challenge process, which means that they could be challenging that with their own information or their own working knowledge of IR35. So hence you need to be relatively knowledgeable yourselves to be able to manage that challenge process. Reasonable care, like I said, we'll cover in a moment. And the small company exemption comes from the Companies Act. So to be a small company and be exempt from this piece of legislation, or to change this legislation, you'd need to pass 2 out of 3 tests. The 3 tests are to not have more than £10.2 million turnover, not more than £5.1 million assets, and not more than 50 employees. So if you pass 2 or 3 of those tests, then you will be classified as a small company, and Chapter 8 of ITEPA continues to apply, which means it's the contractor's responsibility and liability still. It's not yours. If you aren't a small company, then these rules will apply. And if you move from being a small company out of that exemption at a later date, then the rules would start to apply from the start of the next tax year. So even if you are a small company now and you grow, there is a chance that obviously those rules will apply in the future. And that looks at group holdings, common ownership and directorship. So if you're a group of companies that have 4 or 5 different businesses, it's the overall size of the group of companies. And some of the challenges that we tend to find that clients are facing is highlighting and finding the contractors within their business, then assessing that workforce and making sure that they've taken reasonable care. How are they going to communicate that with the supply chain and having visibility across that supply chain and making sure that it's compliant. And then lastly, and some of the bits we'll cover today, is what do you do with contractors that are inside? What is that migration process? So we move on again, please, Pete. So reasonable care, this was introduced just prior to the public sector changes in 2017. So very late on, I think it was the March of 2017 that reasonable care was introduced, but was only defined properly in the last 6 to 9 months. So HMRC have tried to now kind of explain this a little bit better and tried to give a proper definition for it. So there's an employment status manual, which is ESM 10014, that relates exactly to reasonable care and what does and doesn't constitute reasonable care. So some of the things here that don't constitute reasonable care are blanket inside determinations or wide-ranging role-based assessments. So what I mean by that is that if you've just decided that all of your contractors or all contractors doing certain roles are inside of IR35, that won't constitute reasonable care. It's likely to leave you open to a challenge process. And there could be additional claims for things like employment rights, holiday, unpaid holiday from your contracts that you need to be wary of if you do look at going down that route. And I think it's a bad way of managing this process, and we'll talk you through how to do it better. Failing to re-review where there's a material change has occurred. So this isn't a one-off obligation that you need to do prior to April the 6th. This is an ongoing obligation to display that you've taken reasonable care in your assessments. What we advise clients is that once you've done your original assessment, and for example, you've got 10 contractors, you do the assessment of those 10 contractors. Post-April, you just need to then do a sample audit every 6 or 9 months of a small proportion, probably around 20%, so a couple of those contractors, to make sure that you're continuing to take reasonable care over that period of time. The only other time you'd really need to come back and reassess that is if there's been a material change to the working practice or contract. So you'd need to re-review immediately at that point. So perfect example, contractors engage on a 6-month contract. They come to the end of that and you move them on to project B rather than project A. That is a fundamental change to the working practice and contract. So you need to reassess at that point. Someone doing the assessment for you and having lack of knowledge of IR35 and being responsible for those determinations won't constitute reasonable care, or inputting inaccurate information into an online assessment tool. A lot of people look at using HMRC's own assessment tool, CEST, and it's got a lot of issues with it. And one of the issues is that if you don't understand the questions you're answering or input inaccurate information, then it won't be deemed as reasonable care and will leave you open to risk and liabilities. If you subcontract the determination process, you need to make sure, one, that the person doing that is knowledgeable enough, understands IR35 and can answer the questions correctly, and also has full visibility of the assessment. And that assessment should include working practices and the contract, so not just the working practices. And dependent on what you do, you may bring additional risks into your supply chain. So you could pose additional risk into your recruitment businesses that are helping you by not doing the process correctly as well. So making sure that you do it correct really helps that supply chain compliance. Move on again, please, Pete.
Oh, sorry.
It's okay. So I want to talk a little bit around the supply chain and statement of work. So firstly, I'm just going to cover off the liability flow, which fits into that kind of supply chain diagram. So this is a lengthy supply chain, I suppose, in terms of there's a client and there's 3 intermediaries within this supply chain. So there's 2 intermediaries, intermediary 1 and 2, which most typically are recruitment agencies and possibly the fee payers as well. And this shows you that the client needs to pass that status determination statement to each entity in the supply chain. So they need to pass that down to intermediary 1 or the agency that they're engaging with, and also the limited company contractor. So that's so the intermediary knows how to pay the worker and the PSC knows how they're going to get paid. Each intermediary within that supply chain then has a responsibility to pass that on. So if intermediary 1 didn't pass it on to intermediary 2, the liability would sit with intermediary 1. Where you've got quite a simple supply chain and it's just the client and then recruitment agency, obviously you just remove the intermediary 1 and 2 between these and you just end up with a client and fee payer. So the client needs to pass that determination to the fee payer, and then the fee payer needs to make the deductions relevant to that SDS. So if the role is deemed as inside of IR35, the fee payer would need to make sure that UK tax and national insurance contributions have been deducted. When HMRC investigate in the future, if they find that there's been non-compliance in that supply chain and that a liability exists, then that will initially sit with the fee payer. So, however, if reasonable care hasn't been taken, that will be with the client. So if the client doesn't take reasonable care, then they carry the responsibility. If they do, then the liability passes to the fee payer. If HMRC investigate and they find there's a liability and reasonable care has been taken, they will look to the fee payer to reclaim the tax and national insurance contributions. If they're unable to for any reason, because the business no longer exists, is insolvent, hasn't got the funds, etc., then they have the power to move back uphill. So that under the Transfer of Debt Act, they can move back up to intermediary 1 if there is one, or to the client. So making sure that your supply chain is compliant and that everyone's working to the same rules. So if you're a client that's making the determination, you pass that to the fee payer ignores it and pays the workers gross, there could be a liability that arises and it could open you up to risk. So making sure you're aware of your supply chain, who you're paying, who you're working with, that you're working with reputable companies and that they've got robust processes in place will reduce that risk within the supply chain for you as well. We could move on again, please.
Just before you go on, Paul, so some of you are asking about the slides. Yeah, we will share these out with the recording after the event.
Brilliant. We'll talk a little bit around SOW or outsourced services, and there's a number of different terminologies that are used for this. So statements of work, outsourced services, projects, deliverables, managed service. There can be lots of different labels that are given to these types of services, and they aren't something new, and it's not a silver bullet for IR35. So labeling a contract as a contracted out service or a statement of work won't prevent the IR35 rules from applying. The definition of client can move up and down the supply chain. So what that means is that, I'll give you a real life example. So if you wanted a new website building for your company, you've got a couple of options. You could go to an external web design company and they could build that for you, and you give them a scope of work, tell them how to do it, and they decide how they build it, in what order, and what staff they use. That's a true contracted out service. So that means that the web design company becomes the client in the eyes of IR35. And you no longer have responsibility for making the assessments because it's a properly contracted out service. If, however, they were delivering contractors on site for you to control and tell what to do, it would mean that you're the client in eyes of IR35. So making sure that any services, subcontract arrangements that you've got are truly contracted out helps you from an IR35 standpoint. But all it does is moves that responsibility down the supply chain to the entity that's providing the statement of work. So I said earlier, the definition of a client is the one that's receiving the services from the personal service company or limited company contractor. That reasonable care obligation moves with the entity as well, so that whoever's the client needs to take reasonable care in that process as well. And some recruitment businesses now try and offer an SOW or a statement of work or outsourced service, and absolutely it's valid and 100% it can be done, making sure they've got enough experience, that they've taken professional advice and guidance before launching it, and that they're going to fulfill the whole project for you. So it's exactly the same as if you were looking at any provider in the marketplace that was going to offer you an outsourced service. You need to make sure that they can deliver that whole project and that they take on the responsibility and liability. If it's a contrived contract, HMRC will look to ignore the contract that's in place for the contracted out service, and we'll just go straight back to the ultimate end client, i.e. you. So if it is a truly contracted out service, it's a really helpful process to go through. Actually delivering the contract or delivering your contractors on a time and materials basis versus a deliverables basis, it's probably slightly worse from an IR35 perspective, but doing it on deliverables is probably stronger, but it isn't the be all and end all. So if you're looking at just manipulating your contracts to say that you're going to have the billing done on deliverables, it won't necessarily help that much, but it can make a difference in the overall outcome as well. So it's looking at the whole way of working, the working practice and the contract all wrapped around together. So we could move on again, please, Pete. I think there's an example of how that liability or the responsibility in the supply chain can move. So, for example, here there's client, agency, fee payer, PSC, and worker. So they would be the normal agency, the normal entities that you could see in there. So the definition of the client can move depending on who that outsourced service is provided to. So in this instance, if the client was outsourcing the whole project to agency 1, then that agency could then become the client in the eyes of IR35, and they'd be responsible for doing the assessments, responsible for taking reasonable care as well. If it was a contrived situation, HMRC would ignore agency 1 and go back to the client at that point. You can look to insert fee payers within the supply chain, but again, you need to do necessary checks to see if you're able to do that. If that helps you, is it someone that's managing the compliance for you? So that's a service that we offer through Brooks & Group, where we've done the IR35 reviews. We can become the fee payer and help in terms of the outsourced administration, the responsibility. But if you are looking at inserting anyone like that, then you'd want to make sure that they're a trusted partner that you're working with, that you've done your relevant due diligence checks, and that they're going to be managing all of that compliance for you. The importance of the work that Pete and Identifi does is not much more than just finding and placing the candidates. Who does the proof of right to work, the onboarding, the compliance checks, setting up the contracts, and then the due diligence on the payroll vehicles that they use. it's all well and good if you do the IR35 assessment right and get the SDS right, but then someone in the supply chain doesn't follow that. With that liability flow and transfer of debt, it could still come back to you. So make sure that your whole supply chain is compliant and that you're checking how all the workers are being paid within that. If we can move on again, please, Pete.
Professor Whitty's got nothing on me, has he?
Just an example of this, have a standard real payment chain, and if you wanted to insert a fee payer, how that would normally work. So that definition of fee payer, as I said, can move in the supply chain. So it can be the agency that acts as the fee payer, where you're paying workers direct yourself. And I speak to a lot of clients each week, and the majority that I find, not 100% of their supply chain is paid through another entity. So what I mean by that is that the client is engaged with a contractor directly, not by a recruitment agency, because they've worked for them previously, they know them, or they're a friend of a colleague, for example. So if you're paying them direct, you'll be paying them out of your invoicing or PO system more than likely at the moment. If they're inside of IR35, you're going to need to deduct tax and national insurance, or you're going to need a fee payer that can do that for you. If you start deducting the tax and national insurance yourselves, it can no longer go through your invoicing and PO system, and it will need to go through your payroll software. The second question you need to ask is, can your payroll software facilitate net payments to a limited company? Most of them can't. The reason being is that with a contractor, it's normally a VATable supply chain, which means they're charging VAT. And to calculate the PAYE tax and national insurance contributions, you need to remove the VAT element before processing pay. So it can get much more complicated than you think. So you can move that responsibility out to your agency, and then they can work with people like ourselves that help in terms of making sure there's a UK-based umbrella company and it's a compliant payroll vehicle that's being done. I've been asked quite a few times recently, can the PSC be paid gross and then the worker sort out their own tax and national insurance contributions? It's a common question that's coming up at the moment because people are trying to avoid that fee payer liability, and absolutely not. By the letter of the law, you cannot do that, and it brings a huge amount of risk to the supply chain by doing that as well. So something to be really wary of. If your workers, your contractors come to you saying, if you pay me gross, I'll make sure the correct tax and national insurance is paid. What HMRC are likely to do is still come after you for the tax and national insurance contributions, and the worker wouldn't have to repay that either. So the worker will be very happy, you won't be. So really important that you make sure you follow the letter of the law, that the client makes the determination and the person paying the worker deducts that. So not the PSC, it has to be an intermediary prior to the limited company contract that deducts tax and national insurance. If you can move on again for me, Pete, please. So a bit on contractor migration, you're bound to have some contractors that fall inside of IR35. So HMRC stats, they feel that 33% of contractors will fall inside of IR35. I presume that's them putting a finger in the air and guessing it was a third. I don't know any stats that point to there being a third. And from my experience, it varies massively sector to sector, job role to job role. So we've done work for some clients that have got thousands of contractors, but they all do very similar roles in a low skilled, lower paid sector. For example, HGV driving is very difficult to be outside of IR35 because you're told where to go, when to go, where to do it, and you're using someone else's machinery. So you're very controlled. There's mutuality of obligation, and you're using someone else's equipment. So, and you can't substitute. So highly unlikely to be outside of IR35. And those will skew the stats in terms of how many roles are inside and outside. If you're an IT business hiring contractors that are on high rates of pay, highly skilled and needed to bring in additional specialities outside of your BAU employees, then much more likely to be outside of IR35, and you'll get a much higher percentage. So for some clients, we get 90% of roles outside. For some clients, it's as low as 50. So it does vary massively by sector. So if the roles are inside of IR35, the next issue is, what are you going to do with them? So those contractors need to have been paid through a PAYE vehicle, making sure that tax and NIC has been deducted, and that's both employers NI and employees NI has been paid. So once the contractor receives that SDS, there's probably 4 ways to be paid in effect, which is payroll. That's either your payroll, agency payroll, fixed term contract, depending on how you want to work. They could work umbrella, PAYE. You just need to make sure that's a UK-based umbrella company that's deducting the right amount of tax and national insurance. There are, unfortunately, still some non-compliant umbrella companies, and I use that as a wide-ranging term because they classify themselves as umbrella companies, but there are still companies that look from the outside like they're a UK-based umbrella company. However, they have offshore intermediaries or offshore businesses, earnings, benefits, trust, non-compliant payroll vehicles sat in the background of their business. And that can pose a real threat if you think they're a UK-based umbrella company, but they aren't. Again, one of the reasons of putting an agency in your supply chain is to manage that level of risk and compliance for you. You can pay them through what's called a deemed payment through their limited company. And that's what we spoke about before in terms of you need to, so for example, simple maths, they get paid £1,000, there's £200 VAT, so it's £1,200 in total. You need to take the £200 off, calculate the tax and national insurance on the £1,000, add the VAT back on, and then pay that net payment plus the VAT to the limited company contractor. However, the entity that's paying them will also need to make sure that they've renegotiated the contract rate for the employer's national insurance contributions of 13.8, because the deemed employer, the person that's paying them, will have needed to have deducted or paid that 13.8%. So you'll have to decide if you're increasing their day rate by 13.8% or you're reducing it, or how is that going to work if you try paying them that way. It's quite a complex way. I would highly recommend you don't go down that route. It's complex and it's not great for the contractor. They're no better off. If they're probably worse off because they've got no employment rights, no employment benefits. And also they've still got to continue to pay their accountant to file nil returns effectively for them. So very little benefit to a contractor working that way. The other option that people regularly ask is, can they go and work as sole traders? Yes, they could. However, you're probably bringing more risk into your supply chain again. So there's different legislation that impacts sole traders than there is to limited company contractors. So the original legislation for sole traders was called IR36. It's recently been renamed to ES/FS1, I think it is, or 2, the employment status fact sheet. And it's a similar, very similar test, which is for supervision, direction, or control. So quite a similar test, but actually it's harder to pass because for IR35, you're looking at the whole piece of legislation. You might pass on mutuality of obligation, where sole trader is very much around that supervision, direction, or control part. So it can be harder to pass. And if you're inside of IR35, you're not going to pass the sole trader test. So very unlikely that's going to be a suitable way of working. If it is a way of working and it's a way that you want to pursue, you then need to consider other types of legislation. There's legislation from 2014 called the Onshore Offshore Intermediaries legislation that affects sole traders and who pays them. So if your agency's paying those sole traders, they have to do the SDC test and they will carry the liability. So it's really risky for your supply chain because it's putting additional work on your recruitment agency and additional liability into that supply chain again. So be careful which way you move contractors because they could create more problems for you in the future. So just finding the one that's best for your business is probably one of the biggest issues we find around contractor migration. Move on again, please, Pete.
So Paul, just before we do that, I've got just another quick poll here. So contractor migration. So if you can see the polling, it should come up on your screen now. So is your organization considering migrating contract workers to inside IR35 contracts? If you could give us. See, it's great. Yeah. Bit of a spread, a lot of maybes, a lot of, yeah, we get this a lot. People unsure that if they're going through the determination status, but yeah, just quickly, if you can, hopefully for those that couldn't see the poll, it might have popped up now. If you could just give us your answers in there.
While everyone answers that, it's probably worth bearing in mind that it's not just the payroll process that you need to think about, it's actually the contractual side as well. So if your contractors are on 30 days notice and you're looking to move them to an inside position, you're going to need to start issuing those notice periods shortly because you're going to need to give that at the start of March for it to expire prior to the 6th of April to give them new contracts. It's a different contract between inside and outside. So your roles that are inside are going to be subject to AWR and they're going to opt into the conduct regs, where when they're outside and working through a limited company, they opt out of those because they're employee benefits, employee rights. So you need to bear in mind the contractual situation that you're going to need to migrate or novate all those contracts over that period as well.
Yeah, so big proportion of people sort of undecided, not sure what they're doing yet. Sort of 25% saying yes, sort of 13% saying no. So yeah, interesting results there, and we'll share more of that later on. So sorry, Paul, I just thought just check everyone's still awake, and we're on to the next slide. So sorry to interrupt you.
No problem at all. Let's make sure I don't bore people to sleep talking about IR35. So, and to be fair, this slide could probably send your head into a spin. So I'm going to keep this I'm going to keep this one really high level. So this is looking at financial implications if PAYE is due. So effectively on the left-hand side of your screen, you're keeping contractors outside of IR35. So either you've done your assessment already and you're happy that they're outside and there's no change, or you can look where you could implement changes to either the contract or the working practices to legitimately keep them outside of IR35, and there are a couple of options to keep them outside. If that's the case, really simple, really straightforward, you continue to pay them gross. If they're inside, then PAYE is due, and you've got to choose a way of paying them. What this slide is doing is highlighting the different costs that you probably don't understand sit within that. So that deemed PSC, like I mentioned before, there's the VAT element that needs taking off, and then employers NI that needs calculating. And these examples are based on £40 an hour over 40 hours a week. So that employer's NI needs to come from somewhere. So either you as the client, you're going to have to pay an increased rate, or you're going to have to renegotiate your contract rates down, which I'm sure the contracts aren't going to be happy about. If it's PAYE, again, employee benefits and employers NI needs picking up by the person that's employing them. So additional costs, responsibilities that are included. If you put them down the route of umbrella and don't offer a rate increase, then the contractor is going to take a significant rate reduction and a take-home reduction. Percentage-wise, it's around 25%. It varies between, I think, 22 and 28. So if you take 25% as the kind of benchmark, then if they currently take home £500 a day, then it's going to be a reduction of about 25%, the difference to that. If you offer an umbrella with a rate increase, then the amount that you need to increase the rate is, again, right around about 20% to compensate them for the difference in employers' NI and the different additional tax that they're going to pay. So instead of paying £40 an hour, you're going to be paying £48, £49 an hour to try and compensate them for that. So I imagine most companies can't do that. So again, making sure you got your IR35 solution right will keep as many contracts as possible on the left-hand side of the screen, rather than being on the right. The ones that are on the right, if they are genuinely disguised employees and inside of IR35, then the umbrella with no rate increase is probably the easiest one to process, and probably the least difficult for you to administer or to explain to the contractors, because their roles are genuinely inside and they need to be employed. So won't go into any more detail on that one. We can spend quite a bit of time on that one. So the other thing that you should be considering is do your contractors need some sort of financial advice? And it depends on how many contractors you've got, whether you want some help with this or not. And this is the type of stuff that we tend to help with outside of IR35, which is questions that contractors should be asking themselves. So what are they going to do with their existing company? So these are some questions that you might get. So they could close it down, they can keep it open, they can go through an MVL, a members voluntary liquidation. There's lots of different options for them. How can they maximize the tax relief when exiting their limited company? And then how do they avoid emergency tax when they move through different assignments in the future? So at the moment, working through their limited company, they work for one client for 3 months and then move and work for another one, which is really simple and straightforward. It's different assignments and different income that's coming into their limited company. In the future, when they move from client A to client B after 3 months, if they're on PAYE, they're going to get P45 from client A. They'll have an emergency tax go before that goes through for client B, and they have no continuity of employment. They can't do things like salary sacrifice pensions, or certainly not over a long term. So the benefits of things like umbrella companies come through that is that they've got continuity of employment, access to staff benefits, salary sacrifice pensions, etc. How will the employment contract differ? Something I spoke about before, in terms of it's a completely different contract where they opt into things like AWR, the agency workers regulations, meaning that they get auto-enrolled into pensions, and they get employee benefits, and they get matched permanent pay, which means they get paid at least the equivalent of their existing colleagues within the business. So there's lots of things to consider and lots of different bits of legislation as you move people around, depending on their payment solution. And then the last bit is that from a contractor point of view, how is that going to impact their future mortgage renewal or taking out credit cards, loans, if they're constantly doing 3 month short period fixed term contracts? They're going to want something that gives them more flexibility to move from contract to contract, or to be able to flip between limited company and umbrella within the same tax year. I think what you will find, and we definitely found in the public sector, is that some contractors do 3 months inside, 3 months outside, and that way they need to find a flexible solution where they can move between the two. So finding a supplier that can offer both types of services and move them through is really useful. But if you need more help with what the contractor options, then Pete would happy to be help, or I can do that as well.
Yeah, just on that as well. So if you're one of our clients already, we are running a contractor specific webinar, which is to help people answer all of these types of questions, to essentially to help you to help your contractor, because often it's an education thing. There's lots of misinformation around there, as Paul's mentioned. There's lots of umbrella companies that are not compliant and are giving out sort of dodgy advice and helping people, and it's causing misinformation back up the supply chain, which you're having to deal with. So we've decided to run a contractor specific webinar, which is going to answer all these types of questions, and also to help them, what to look for in their contracts to make sure that they're asking the right questions and not burdening you with random mortgage questions. So to look out for that. That will be coming out next week.
Cool. So we'll talk a little bit about the risk of direct contractors. So like I mentioned before, most clients I speak to have contractors that they've picked up directly themselves, and the risk come here is that you become the client and the fee payer. So when I mentioned earlier that the two kind of key definitions in the legislation are client and fee payer, they can move up and down that supply chain and move around dependent on how the contract is structured and who's paying the worker. So for where a client is paying workers direct, so they've not got a fee payer or a recruitment agency in that supply chain, and they work for you, so you're the client and you pay them, then there's some additional risks that you need to be wary of, and the main ones sit within this section here. So the Criminal Finance Act has been around now for 3 years in terms of the failure to stop the facilitation of tax avoidance schemes. So if you're paying a tax avoidance or a non-compliant payroll vehicle, then you could be at risk of the Criminal Finance Act. There's MSC legislation that's now been around for 14 years around being involved in the payment and management of limited companies, profiteering from that, or looking to try and profiteer from that. The intermediaries legislation I mentioned before, in terms of that's been around now since 2014, and looks to manage how the self-employed sole traders are managed and how that piece of legislation sits around the intermediaries that pay them. So you need to be careful that you're not coming foul of that by moving contractors from one payroll vehicle to another. Agency workers regulations, these don't apply when you're a limited company contractor, because you are a limited company self-employed contractor. As soon as you become a PAYE contractor, those AWR regulations apply. So it's really important that AWR information is done correctly. And if you haven't got a fee payer or an intermediary like an agency in the way, then that can cause additional problems and administration for you. And the last bit is that transfer of debt act. So if there is non-compliance within your supply chain, HMRC have the power to move back up the supply chain. So you need to be really careful that you're not seen to be facilitating tax evasion or avoidance, or trying to move them through non-compliant payroll vehicles. And it's something that can take up a bit of your time if you've got a lot of contractors that you manage yourselves. So again, if you need some help with that or the additional risks or problems with it, myself or Peter would be happy to have a conversation with you about how best to manage or migrate that risk and that problem away from you as well. So last few slides just on how to prepare. So when we start talking to clients, this is one of the important things, is that what are you going to do post-April, not just prior. So I always think there's 3 issues around IR35, and I think we've covered 2 of them so far. So the first one was, what is it? How do I assess it? I need to do an audit on my contractors. How can I do that? The second is, I've got now 1/3 of my contractors that are inside of IR35. How am I going to pay them? And that's the second bit we spoke about today. The last bit is, what are you going to do post-April? So you'll need to understand what your talent needs and resource solutions are going to be. So you'll need to plan better in terms of when you need to recruit contractors, because this legislation starts on the 6th of April and means that you've got an ongoing duty of care around reasonable care, meaning that you need to do the IR35 assessments and the SDS production prior to the role being recruited for. If you go to Pete and ask him to recruit you some IT contractors for a new Java development job, then how are you going to be able to recruit for that role if you don't know whether the role is inside or outside? Pete won't be able to know what that take-home pay is for the contractor to be able to talk to the contractors about the job. That role needs to be assessed prior to the role going out and being advertised. And for all that, you could decide it's going to be a fixed-term contract, contractor, or statement of work after the stuff we spoke about today. We find with most clients, they don't have any sort of centrally management or visibility of MI on their flexible supply chain. So they don't have a system or process in place, even if it's just an Excel spreadsheet to track which agencies they're using, who's paying their workers, how their workers are being engaged, so they know who to do the assessments on. I'm always surprised when people say to me, well, I think I've got 20 or 30 contractors, and then a week later they found 50 or 60. They seem to hide them in different places. So worthwhile checking with all your different areas, line managers, around whether they're using contract resource. Then there's that bit around ongoing IR35 requirements, making sure that you're maintaining reasonable care in the future and taking a kind of a risk-based approach to that, making sure that you're taking reasonable care, but you're keeping as many of your contractors outside of IR35 legitimately as possible. And then there's concerns over tax risk versus commercial risk. And what I mean by that is that you may think that the easiest option is to move all your contractors to an inside determination and pay them all PAYE. Yeah, it's easier for you, but it's a huge commercial risk, because if all your contractors walk off site, how are you going to recruit them? You're going to have to go and recruit full-time employees instead, which are going to be more costly. You've got all the employment risks and burdens of that, and also how much is that going to delay projects that you've got on. So it could be a bigger commercial risk than it is a tax risk. So it's weighing up how to do this properly without causing you additional problems in that supply chain. And then supply chain management again. So what engagement models, how are you going to see the visibility on that, and making sure that you're managing risk in the supply chain. And that's all the stuff we've been talking about today in terms of the risk of those direct contractors, working closely with your agency partners and making sure you've got visibility on those payment vehicles. Move on again, please, Pete. There's only a couple of slides left now, so if you do have any questions, please send them through. A bit of an idea, I've run through this one before in terms of available solutions around assessment of IR35. So if you haven't started your assessment, I think there was probably 30 or 40% from the poll at the start that hadn't started yet or just about to. There are, I would say, 3 buckets of kind of ways that you can do this. And one would be getting a tax consultancy firm. One of the big 4 accountants will be able to come and give you some advice and strategy and guidance on IR35. You get charged quite a lot for it, and it probably won't do the doing in terms of the assessments. It will do the very high level strategy part of this. You could use an automated IR35 tool. HMRC's test was the first one of these. It was launched prior to the public sector changes. There's numerous issues with any sort of online assessment. The main 2 or main couple for me would be, doesn't review the contract, it only reviews the working practices, and it will review what information you put into it. So if you've already got bad practices now, then you're likely to get much more of your contractors inside of IR35 than if you go through a process of legal consultancy around what you can change first. And then the last one is something like our service, where I would classify it as a niche legal service. So it's not automated, it's not instant. It's normally within 48 to 72 hours, the turnaround of the SDS. So it isn't instant, but it is a person that's reviewing that for you. So they review the contract, the working practices, and give you legal advice in that process, making sure that you get the right solutions that are suitable for your contractors again. Can move on again, please, Pete. Yeah, the way that we do that, we've launched a portal to be able to store all the information in as a central repository. So all the information, the contracts, the working practice questionnaires, and the SDSs are all stored within that. But all of the reviews are done by legal professionals sat in the background. So again, if anyone wants any more information on how we do that, then happy to work with yourself and Pete on how that works as well.
Okay, so we've got some questions in there. So the offer there's lots to get in. Essentially, we're trying to help. The more compliant that it starts with, and you know, being the hiring organisation, the more compliant you are, the more compliant your supply chain becomes. But it doesn't just stop there. You know, you have to work with a compliant supply chain. So to do that, we're offering everyone that's on this free template to collate all of your contract data. This will be sent out to everyone that's on this. So you'll get that. We're also offering a free one-to-one consultation with the business IR35 project team or whoever deals with contractors. You can email me at that email address, and we can get that set up. It's a no obligation consultation. We're as I say, it's better that we help you to become compliant because it makes everything easier for everybody. And if you do need help with an audit, Brookson have kindly offered a 20% discount. Again, if you reach out to me, we can get that facilitated for you. Ultimately, if it's 1 or 10 or 100, whatever it looks like, talk to us and we can come up with some bespoke pricing if you've got multiple contractors. But if you've got a handful of contractors, then it's easier if we can arrange that on a one-to-one basis. So I'll leave that there. So we've got some questions in the chat panel, so I'll go through these. as quickly as we can. So, but if we don't have time to get through them all, then what we will do is we'll collate the questions and we'll put a frequently asked questions document together and send that out, for you guys to read in your own time. So the company I'm currently providing services to are a professional service organisation. They have suggested that IR35 can cascade to their clients so they can take on risk when it comes to contractors. Is this correct?
Yeah, it is. So it's the statement of work piece that we were talking about before, in terms of if the outsourced service provider is taking on the whole project, then that responsibility around IR35 cascades away from the client down to the service provider. So for example, client A engages with an outsourced IT consultancy firm, and that is a fully outsourced project, then that would move that responsibility around the status determination to the IT consultancy business, not client A. But client A would need to make sure that that is a truly outsourced service, or it will just look contrived and HMRC would ignore it.
Yeah. Next question is around small company exemption. So is that the end client or agency as the business paying the contractor?
Yeah, it's the client. Yeah.
Yeah.
And the definition is purely on the client.
Yeah. So next one is IR35 applies to contractors paying tax in the UK, but does not apply if they are working via a UK agency, but for a company located in the EU.
So as long as they're a fully overseas entity, then yes, the old rules, Chapter 8 would apply, where it would be the contractor's responsibility.
Yeah. If the client refuses to make an IR35 determination, but has been asked to do so by the agency, then the client is liable if HMRC investigate, not the agency.
That's correct. Yeah. So whether they refuse or they've just done it incorrectly, they will become liable. So that's the point we spoke about on reasonable care before. If the client doesn't take reasonable care, and that could be they've done the assessments, but they've purposely put information in wrong. They could refuse to do the SDSs. They could state they're a small company when they're not. So that lots of different things that could be classified as not taking reasonable care. Then the liability then sits with the client, not the fee payer.
Yeah. So, hi, I'm a contractor and work 3 days a week for a client who is based in Switzerland. Does this fall within IR35 rules since my client is not UK based and does not have a UK legal presence or entity?
Yeah, so as long as they don't have a UK legal presence or entity, then the old rules of IR35 would apply, i.e. if you're paying tax in the UK, then Chapter 8 of ITEFA applies, which means it's the contractor's responsibility, not the client's.
Okay. So if the end client provides a statement of work for each contract, but refuses to state whether it is inside or outside IR35, then they are liable, not the agency / fee payer.
Yeah, a bit of confusion around the terminology statement of work probably. So if they provide if it's a statement of work, that could be that they're paying on a project or deliverables basis, but they're still the client. So they would still need to do the SDS. If it's a truly outsourced statement of work or a contracted out service, like we spoke about before, where it's that IT consultancy that's taken on the whole project, then it becomes their responsibility, not the client anyway, so they don't need to do that assessment.
Yeah. And do clients and agencies need to issue SDS to contractors who are deemed and agreeable to be inside IR35? Or if the correct tax is being deducted, is the SDS simply a formality? It's a good question.
Yeah, it's a really good one, actually. It's one that comes up quite regularly. So if you've already got contractors that are working PAYE now, either through yourselves or through an umbrella company, in theory, the SDS doesn't need to be produced. The reason being is that there's no PSC in the supply chain, so IR35 doesn't apply. The only thing to be wary of there is that some contractors that we work with now are on £500 a day and still want to work through an umbrella PAYE scheme because it's easier for them. They don't have to set up a limited company. So you might be engaging with PAYE contractors now that may want to be limited contracts in the future, or when they leave and you replace them, they might get replaced by a PSC. If that's the case, then you would still need to do the assessment and do that assessment and produce an SDS. But if you've currently got lots of, I don't know, say administration staff that you're paying through PAYE or an umbrella scheme at the moment, then you don't need to do assessments on those. No, it's only where there's a PSC in the supply chain that IR35 applies. It is a question that comes up quite regularly. There is, if you've got 200 contractors, but only 50 of them work through PSCs, how many should you be assessing? So again, good idea to have one of those consultation meetings so we can just chat through the nuances of that, because you might have actually 200 of them that need assessing. It might just be the 50. Depends on the roles, the types of workers you've got, and what you can do with that.
Yeah, absolutely. Here we've got 12 direct contractors looking to outsource. Would you be able to handle and manage the process for us? So yeah, that's exactly what we can do for you. It could be that we help you manage them, or we take on that responsibility for you. So absolutely, please get in touch after this if that's what you're looking for. There was one other in the chat, I think. Bear with me 1 second. Ooh. My chat panel's disappeared. Where's that gone? Ah, there we go. What happens when a contractor works for limited periods in a year, i.e. 2 or 3 times for about 4 weeks? It's been difficult to determine whether they are inside or outside.
So the rules still apply. Yeah. So if it's a limited company contractor that's engaging, whether it's for a day or a year, then IR35 still applies and the assessment would still need to be done. So they're likely to be more akin to being outside of IR35 because there's not that mutuality of obligation in terms of they're not continuously accepting work and completing work for you. However, you'd still need to do the assessment. So whether you're engaging with a contractor or freelancer for 1 day or a month or a year, you still need to do the assessment for that.
Yeah, fantastic. I think that's it. I think we're pretty much there. I don't think I've any last questions before we hang up, guys. Looks like that is it. Paul, fantastic as always. Bringing to life a really dull subject ultimately, but guys, it's important, and hopefully you've learned something there today for you to take away. The document will come out to you off the back of this. If you are interested in speaking to us about any help, then please just get in touch, and we'll do whatever we can to help you out. Other than that, thanks, and enjoy the rest of your days. Cheers, guys.
Thank you very much. Cheers, Pete.